The big beautiful bill just became law, and while everyone's talking about SNAP changes and Medicare cuts, there are more tax changes buried in this bill that directly affect your business, changes that could significantly impact your bottom line. I'm talking about tips becoming tax-free, overtime wages getting special treatment, SALT deductions quadrupling, and estate tax exemptions hitting historic highs. These aren't minor adjustments, these are fundamental shifts in how businesses handle taxes and compensation. Here's what's happening. Congress passed H.R. 1, now Public Law 119 from 21, and it contains some of the most significant tax changes we've seen in years. This isn't about politics. This is about understanding changes that affect how much tax you pay, how you pay your employees, and how you structure your business going forward. We're going to break down everything you need to know. What the big beautiful bill actually is, the major tax changes and who they affect, what it means for everyday business owners, what it means for employees, what it means for high net worth individuals, the timeline of when things take effect, and what actions you need to take. This is going to be a comprehensive video because there's a lot to cover, but I promise you'll walk away understanding exactly how this affects you and what you need to do about it. At Numeratus, we've been analyzing this bill since it passed, and we're helping businesses understand and adapt to these changes. So let's get right into it and break down everything you'll need to know. Part 1. What is the big beautiful bill? First, let's establish what we're actually talking about. The big beautiful bill, officially H.R. 1, is a major piece of legislation that became law on July 4th, 2025. It's called a reconciliation bill, which means it was passed using special congressional procedures that affect taxes and spending. The bill makes changes to individual and business taxes, agricultural programs, healthcare programs like Medicare and SNAP, defense spending, government contracting, estate taxes, and much more. But for business owners, the most important parts are the tax provisions that could significantly affect your operations and profitability. Part 2, the major tax changes. Let's talk about the big changes that affect most businesses. Tips becoming tax-free. If you have employees who receive tips, restaurants, hotels, salons, delivery services, this is huge. Tips are now exempt from federal income tax under certain conditions. What this means, a server making $30,000 in tips just got effectively a $7,000 to $9,000 raise in take-home pay without costing you anything as an employer. This makes your compensation package much more attractive. But there are requirements and documentation needs. You can't just call any payment a tip. The IRS will be watching this closely. Overtime wages also become tax-free under certain conditions. For manufacturing, construction, healthcare, and businesses with significant overtime, this changes the economics of labor. An employee working 10 hours of overtime at time and a half keeps all of it instead of losing 25 to 30% on the taxes. This means you can offer the same take-home pay for less cost or better pay for the same cost. SALT deduction increases. The state and local tax, also known as SALT deduction cap, increases from $10,000 to $40,000, but only through 2029. If you're in California, New York, New Jersey, or any high-tax state, this is significant. You can now deduct up to $40,000 of state taxes from your federal return. For someone paying $50,000 in state taxes, this could mean $11,000 plus in federal tax savings annually. But remember, this expires in 2029. The cap goes back to $10,000. This creates a 4-year window to maximize this benefit. The estate tax exemption increases to $15 million per person, $30 million per couple if you've built significant wealth, and you can now pass much more to your heirs tax-free. But like SALT, this has an expiration date. This is a window of opportunity for estate planning that may not come again. Standard deduction and other changes. The standard deduction increases, car loan interest becomes deductible for businesses, and there are various other provisions that could affect your specific situation. Part 3. What this means for different groups. For restaurant and hospitality owners, the tip provision is transformative. Your servers, bartenders, and other tipped employees just became much cheaper to employ on a net basis. You can offer superior compensation packages without increasing costs. You need to update payroll systems, document tip allocation properly, ensure compliance with requirements, communicate changes to employees. For manufacturing and construction, the overtime provision changes your labor economics. It might now make more sense to pay overtime than hire new workers. This affects scheduling, capacity planning, and growth strategies. Consider how this changes your approach to meeting increased demand or tight deadlines. The SALT deduction increase is your biggest win. If you're a lawyer, consultant, or other professional in California or New York, you just got a significant tax relief. But you need to think strategically about timing, when to recognize income, when to take deductions, how to maximize this 4-year window. For high net worth individuals, the estate tax changes are massive. The ability to pass $15 million or $30 million for couples tax-free is a historic opportunity for wealth transfer. This affects how you structure your business, how you plan succession, and how you transfer wealth to the next generation. For regular employees, if you receive tips or work overtime, your take-home pay could increase significantly without your employer paying more. This is real money in your pocket. Make sure your employer is handling this correctly. Improper implementation could cause problems later. Part number 4, the timeline and urgency. Here's when things take effect. Already in effect is retroactive to January 1st of 2025. Tip and overtime provisions, standard deduction increases, and various business deductions. You could already be missing out on benefits. Through 2029, SALT deductions at $40,000. After 2029, drops back to $10,000. This is your window for maximizing state tax deductions. Through 2031, estate tax exemption at $15 million, and there's various other provisions. Longer window, but still temporary. Understanding these timelines is crucial because missing the window means missing the opportunity. Part number 5, what you need to do. Let's talk practical steps. If you have tipped employees, review your payroll systems, ensure proper tip reporting, document everything, communicate with employees, consider restructuring compensation where appropriate. If you pay significant overtime, analyze overtime patterns, consider overtime versus new hires, update payroll processing, document overtime hours carefully, communicate benefits to employees. If you're in a high tax state, calculate your SALT tax benefit, consider timing of income and deductions, plan for 2029 expiration, document state tax payments, work with a tax advisor on strategy. If you have significant wealth, review estate plans immediately, consider wealth transfer strategies, take advantage of high exemptions, plan business succession, act before exemptions potentially decrease. Part number 6, compliance and documentation. Here's something critical. The IRS is getting new tools to enforce these provisions. They'll be looking closely at tip reporting accuracy, overtime calculation, SALT deduction legitimacy, and estate valuations. You need proper documentation for everything. This isn't optional. It's essential for avoiding penalties. What proper documentation looks like is detailed records of all tips, clear overtime tracking, state tax payment records, business structuring documentation, contemporaneous records, not recreated later. Part 7, common questions and concerns. Is this too good to be true? No, these are real provisions in federal law, but there are requirements and limitations you need to implement correctly to benefit. How do I know if I qualify? Each provision has specific requirements. Tips must be actual tips, not disguised wages. Overtime must be properly classified. SALT benefits only matter if you itemize deductions. What if I make a mistake? This is why proper implementation matters. Mistakes can lead to penalties, lost benefits, and audits. Get it right from the start. Should I wait for more guidance? No. While some details may be clarified, the main provisions are clear and already in effect. Waiting means missing opportunities. Part number 8, industry-specific considerations. Agriculture. The bill significantly restructures agriculture programs, And if you're in farming or food production, there are changes to subsidies, crop insurance, and support programs that could affect your costs and revenue. Healthcare. Changes to Medicare and Medicaid affect reimbursements and requirements. Healthcare businesses need to understand how this impacts the revenue cycle. Defense and government contracting. Massive increases in defense spending create opportunities, but contracting rules have changed. Understanding the new landscape is crucial for capturing contracts. Energy, reduced restrictions on oil and gas development, changes to royalty rates, and new leasing opportunities. Energy businesses see significant regulatory changes. Part number 9, state-level impacts. Different states are affected differently. High-tax states, maximum benefit for SALT increases, but need strategic planning. No-tax states, no SALT benefit, but advantages in other areas. Agricultural states, major changes to farm programs and subsidies. Energy states, new opportunities from reduced restrictions. Understanding your state's specific situation helps optimize your strategy. Part number 10, looking forward. This bill represents significant change, and there will likely be additional IRS guidance, state-level responses, market adjustments, and competitive dynamics. Staying informed and adapting quickly will be crucial for maximizing benefits. The businesses that understand these changes and act quickly will have significant advantages. Those that don't may find themselves at a competitive disadvantage. Look, the Big Beautiful Bill is now law, and it's creating real opportunities and changes for businesses. These aren't theoretical changes, they're real provisions that affect your taxes, your employees, and your business structure. Some benefits are already available, others have limited windows. The key is understanding what applies to your specific situation and implementing correcting to capture benefits while maintaining compliance. If you need help understanding how these changes affect your business, if you want to ensure you're capturing all available benefits, or if you need assistance with compliance and documentation, professional guidance can make the difference. At Numeratus, we specialize in helping businesses navigate complex tax changes. We understand the Big Beautiful Bill and can help you implement strategies that work for your specific situation. Visit numeratus.us to learn more about how we can help you navigate these changes and optimize your tax situation. And in our next video, we're going to dive deeper into the Big Beautiful Bill on a different level. Don't leave money on the table because you didn't understand the changes. Don't risk penalties from improper implementation. Get the information and support you need to make the most of these new provisions. The bill is law. The changes are real. The question is, will you take advantage of them or let this opportunity pass by?